every company will be a fintech company in the sense that it will derive a significant part of its revenues from financial services that are embedded in its business that can be a non-financial business, be it e-commerce, retail, or mobility, or a different type of a business. This is what Angela Strange said 4 years ago as a general partner at Andreessen Horowitz. And if you think this is a strange statement, it is very much related to embedded finance, which is all about embedding financial services where the customer is, either individual or business, in non-financial businesses. Is this our reality? Will it become our reality? This is what we are here to discuss today. I'd like to welcome my guest today, Meaghan Johnson, who is a celebrated Forbes author, a fintech advisor and consultant that I know from the early days of fintech. And we've collaborated digitally times, and I'd like to welcome you, Meaghan, today.
Well, thank you so much for the invitation, and I'm really happy to be here. So thank you again, Efi.
Yeah, you know, Meaghan, my attention zoomed in to a recent event that you publicized that's upcoming in Portugal that's called the Embedded Every Conference. I must say it's a catchy title. Fintech has grown so much, so we have specialized conferences on either verticals like, you know, payments, or we have definitely crypto and digital assets. And here we are with the Embedded Everything Conference. And I want to take a plunge into the topic of the distinction between a fintech company and a company that's, let's say, embedded several financial services. What is your perspective? What makes a company fintech? What is your position, if you want, to this grand statement that has stayed with us that Angela Strange has made?
Yeah, no, I think that's a really great first question that I think kind of spearheads the whole topic and kind of the philosophical meaning of embedded finance. And I like to kind of think about embedded finance in the context of how it has evolved from bank as a service. And I think this helps to understand the difference between a fintech and a company that is embedding financial services. So when I think of a consumer of a bank as a service provider, I like to think of it as a fintech, a company where, you know, 70% of their product offering is about financial services. On the flip side, when you are a consumer of embedded finance, you know, by embedding one particular financial product or service, whether that be to enhance your product offering for your customers, whether it be in the retail space or the SME space, or even if you're using embedded finance for, you know, operational efficiencies as a way to bring in new revenue streams, new business models, where finance is really just one small part of your kind of total product offering. This is where it skews a bit more towards embedded finance. This is my definition and how I like to look at the world.
Yeah, I would like to maybe look at some examples that come to your mind, both in the retail sector or the B2B sector, that will make it sort of more real to us. Yeah. Where are we today? Because, I mean, we see reports about sizing the opportunity of embedded finance. We started with the double-digit millions, and now I think we are nearly to 1 billion, you know. I've seen numbers, triple-digit millions, but clearly we're not there. But tell us where you think we are today, and maybe through some examples.
Yeah. So A couple weeks ago, I was speaking in Lisbon at the Visa Innovation Program. So it was 8 fintechs they had in Portugal that were pitching their ideas. And I did a small kind of keynote around embedded finance. So I've looked into kind of where we are recently, and this really interesting infographic came out from Whitesite, which is a fintech research company. And they kind of had this, teardown of all the big brands globally that are embedding financial services. And, everyone from like McDonald's to IKEA to Starbucks to some of the, the bigger airlines like Cathay Pacific and everything. So I think it's there, and it's very much there when we think of course, buy now, pay later. I think this is kind of the clearest and most obvious example we have of big brands embedding financial services. I think Apple is a really interesting example because they're actually embedding banking and finance into the hardware, directly into the iPhone via their partnership with Goldman Sachs, which is, I think, also interesting to see how this big tech, big bang partnership is playing out. We've seen that they're looking to kind of have a divorce, if you will. So I think there's definitely a lot out there from the bigger brands. But going back to the event I was doing in Lisbon, so actually more than half of the 8 fintechs were involved in embedded finance as well. So we're starting to see, the earlier stage startups, the scale-ups within the traditional fintech space also looking to play in embedded finance. So we had some wallet enablers, some kind of digital front-end providers for embedded finance. But also an interesting example is Coverflex, a very successful Portuguese fintech. They're playing in the kind of employee benefit space, and that was their core proposition. And now they're getting into fintech by embedding cards and payments and everything. So I think a really interesting example of a tech company that is now, playing in a cohort of fintechs under a Visa innovation program simply by, that embedding of payments and cards. So I think it's becoming more and more ubiquitous. Again, definitely with buy now, pay later payments. And if you think, any brand can offer a wallet, a cards and accounts proposition. I think it's only kind of going to increase in popularity and become more ubiquitous, which I think will then, in 4 years, how will a fintech be defined, right? Like, will we still see neobanks? Will we see these pure play fintechs that have traditionally unbundled a part of, the financial services space, like remittances or lending? Or is this going to be, again, brands that just have logical financial products as part of their proposition and customer experience?
Yeah, so you're really wondering where the rebundling will lead us, and whether it will be rebundling that creates new big entities, the new JP Morgans, the new HSBCs, and so on, or will the rebundling be more like rebundled in big tech, rebundled in marketplaces? I mean, honestly, when I think of embedded finance, Shopify comes immediately to mind, right? Which is a business, a B2B marketplace, right? And it makes a lot of sense there to have embedded services from plain vanilla payment processing all the way to everything, payroll, the lending, and so on. What are your thoughts in terms of embedded finance, whether we're talking about the enablers or the whole theme from the customer's perspective? Is it probably more successful, or it lends itself to B2B marketplaces? Is that where it will be? Because obviously, if we look to the East with the super app model, we could say, okay, that's a big, an example of the ultimate embedding finance in our life, example. But in the rest of the world, that's not the case. We have marketplaces and platforms. Do you see them being the main places where embedded finance will succeed?
Yeah, I mean, I think just to first address the point about what we're seeing in the East, I mean, I think what's interesting is that a lot of the super apps, so for example, I know Grab in Singapore, they were embedding some of the traditional banks' APIs into their product offerings. So they have, some of the foundational products and services they have are brought to life via an embedded finance, so embedded traditional banks APIs. So what we see in the East is a different model. And then, with Grab and these big super apps in the East looking to actually obtain banking license. So this is something I'll touch upon this kind of this. Would the big brands bring this in-house a bit later? But talking about the B2B marketplaces, I mean, I think it's just such a ripe place for embedded finance. And when I look at the European kind of embedded finance bank as a service competitive landscape, like the Mango Pays, the Lemon Ways, Connect Pays, Intergir, Swan, you do see a trend towards targeting these B2B marketplaces because again, you have operational efficiencies. So, by having virtual IBANs, you can kind of streamline payouts, money coming in and everything. And with the marketplace, there's a huge opportunity for revenue-based financing, alternative types of lending and financial products. We see this with Shopify. They have a couple of different kind of lending products under the, Shopify Capital umbrella. There's a lot of up-and-coming fintechs in this space that are looking to kind of take a bite out of this pretty big pie that is, revenue-based financing, even vehicle-based financing. And again, I think this builds upon the success of BNPL as a tool of embedded finance. And again, even with B2B marketplaces, there's no reason why, I mean, Shopify does this, but there's no reason why, European-based marketplaces can't offer expense card solutions or, accounts and payments like curated SME accounts for the SMEs that are part of the platform. I mean, I'm surprised Etsy isn't playing in this space yet. I think there's just so much scope and opportunity for B2B marketplaces to kind of touch upon, even insurances, embedded insurance. It's almost limitless within this B2B marketplace for embedded finance.
But it seems to me that the enablers, the fintechs and techs that are playing in this space are not yet mature to understand the business needs of the industry. And often when you take only a tech approach, you don't succeed in going to market. Is that something that you agree? Do you have that sense from your field work?
Yeah, well, I think so. For example, last year I was working with an early stage fintech that was looking to play in the embedded revenue-based financing space, right? So very much going after the B2B marketplaces. But the problem is when a small company approaches like an Amazon or one of these big marketplaces, the terms are just going to be so skewed towards the Amazon. So for example, Amazon will put some stipulations in place where 80% of their SMEs will have to be pre-approved for a loan. What impact will this have on an earlier stage, enabler? And this is, I think, where, we start to see more incumbent banks making an embedded finance play, NatWest, SEB, I think Deutsche Bank is even getting into this space. Can they learn from the pitfalls that Goldman Sachs has faced when it comes to working with the bigger brands in an embedded finance capacity? Doesn't need to be a big bank and a big brand working together to make this a success. And will we see more success with the kind of smaller, more scale-up fintechs partnering with the smaller, perhaps more localized brands that are looking to make an embedded finance play, whether it be to B2B marketplace or another type of brand?
So what I'm hearing from you is these dating situations, right? Let's call them dating situations, right? It's not, there is no standard protocol in terms of what are the usual terms and conditions. It's not a partnership. Let's call it, you're becoming a vendor to a large provider. And it seems that in most cases, the models that are out there are not really sustainable. They're not, the terms are not good for the provider.
Well, I mean, I think it may not be that the terms are necessarily, unfavorable. That's one aspect. But also, if you're a startup or a scale up, the sales cycle to sell into a big brand, it's long, right? I mean, we're talking more than 12 months, and it's high risk too, right? You have one stakeholder where, 9 months in, the conversations are going well, you're moving to the procurement phase, and then, your primary stakeholder leaves, moves to a different department or something, and it's like starting over. So a lot of the times, I think some of these smaller, more nimbler enables have that, agile way of working, really solid kind of tech, but just the sales cycle is, it's too risky. So you don't want to put all your eggs in one basket. So it's kind of, playing towards the smaller brands, perhaps the low-hanging fruit, and then kind of building up towards that mindset of selling into corporates. It's a complete different beast. But I think what's also interesting is, so for example, Vinted, I'm not sure if you're familiar with Vinted. They're a marketplace where you can kind of, sell, clothes. It's like an eBay, kind of the next gen, more user-friendly eBay, I think. They're pan-European. They were using, I believe, MangoWay as their kind of embedded payments enabler. And Vinted has actually just secured an EMI license from the Bank of Lithuania. So I think, we could start to see some of these bigger brands also look to do what the big super apps are doing in the East and actually bring the license in-house. So we're seeing, I think, a lot of different approaches, whether you're a smaller brand, a bigger brand looking to make an embedded finance play, and also from, the fintechs. And I think what's interesting is, the Solarises, like some of the first generation bank as a service providers, you look at their website and now it's all about embedded finance. So you're kind of seeing even the traditional bank as a service provider shift more towards embedded finance. So there's, again, a lot of different ways in which this is playing out, I think.
Meaghan, we spoke about all these opportunities and the space is moving, things are happening, but they're reshaping. It's not solidified, but it is exciting. But let's look at the risks. What risks do you see? We saw some with the relationship between Apple and Goldman Sachs, and that really manifested in, I would say, failed customer support. And we can see how that can be a problem, a disconnect between the end customer of where the financial service is embedded. What other risks do you see?
Yeah, so I think from my experience working with different brands, whether they be consumers of embedded finance or enablers of embedded finance over the past couple of years, I think there's really three primary risks. So the first is when a bank as a service, an embedded finance enabler, sells a product or service into one of their partners, a brand, and there's low conversion rates, there's low uptake of the product. It's just, not taking off because, there isn't a lot of love going into that product from the brand and also, the embedded finance enabler side of things. So a lot of the projects I've done have looked at these embedded finance products and said, okay, why is the conversion so low? Why aren't customers activating the card? Why are people dropping out at the identification part of the product offering? So usually it's just simply, going to the users, understanding what their pains are, what's not working, and then just kind of, tweaking the product to mitigate those pains from the customer. But a lot of this time, this exercise actually isn't being done within brands and bank as a service providers. So I think there needs to be more focus on, once it's launched, treating it as if it's, a proper product within the platform or the customer experience. So this is, I think, the first risk, is that a lot of the times, these get launched and then they get mothballed, nothing happens to them. They don't turn into this kind of, amazing new revenue stream, or, that one feature that can really bring the brand that competitive advantage. The second comes from the regulatory side of things. I'm not going to talk much about the US. There's a whole lot going on there in terms of the bank as a service embedded finance enabling model, which is quite different to Europe. But I mean, 2023, from my perspective, was all about, regulators kind of reining in a lot of the bank as a service and embedded finance enablers. We saw quite a lot of restrictions placed on, a couple in the UK, as well as Solaris within Germany. And, as a result, if you're then a provider in embedded finance and bank as a service, and you have restrictions on bringing in new partners, how does that change how you service some of the smaller up-and-coming brands? If you have to get regulatory approval to bring on, one new customer per year, you want to make that like an Amazon or a Lufthansa or a pretty big corporate, right? So I think I've seen a lot of earlier stage fintechs and brands, wanting to embed financial services, but because some of the bigger players have these restrictions, they can't put it on their roadmap for the short or medium term. So this is kind of one risk, and I think this would be, an absolute shame if this continues, because a lot of really exciting embedded finances use cases will be put on hold. And I think the third part, you mentioned, customer support. We saw this play out with Apple and Goldman Sachs. My advice would be, if you are a brand or if you're using an embedded finance enabler or bank as a service provider, never rely on them for frontline customer support, because that's not their bread and butter. It risks damaging your brand, and you want to keep that whole customer experience, by your terms, and by outsourcing parts of the customer support, that's a huge risk, as what we saw with Apple and Goldman Sachs.
Yeah, but on the other hand, how do you create the team or the know-how for customer support if you're, let's talk, revenue financing or even payments?
Yeah.
Which is simpler. It's not evident. Imagine, you're a retailer, Etsy, as you mentioned, or whoever. This is not solved yet.
Yeah, I agree 100%. And, at the end of the day, I mean, having worked with many fintechs that have used bank as a service providers, there's just some things that are out of your control when it comes to resolving, a customer question or, a block on the account or something. And sometimes you just have to wait 3 to 5 days to get an answer. I've also experienced this as a consumer as well. So a lot of the, fintechs and apps I use bank as a service providers. They're not licensed. And when I ask a question and, it's taking more than 12 hours, I'm like, all right, this is going to take some time, right? Because I know at the end of the day, this has to be resolved by the bank as a service provider. And this is one of the trade-offs you have, right? I mean, you can't use a licensed entity and expect everything to be perfect. So I think you can overcome this in the way that you, instead of these generic messages back to customers from bots and something, you can just be honest with customers and say, hey, usually this takes, 36 hours as we have to speak to some of our partners. Don't worry, we'll update you, send them a comforting message the next day. I think there's ways you can kind of make it as pleasant as possible for customers, given the fact that, to have that query or problem resolved is out of your hands by using a third party.
So the hope here is for major improvements because of generative AI at the contact centers of these BaaS providers.
Yeah.
So the people that are there can quickly contextualize the issue and respond to it versus, the current situation that is the current chatbots and the current even agents, they cannot really
Yeah,
respond in this way.
yeah.
So that's really our major hope.
Yeah, I mean, there's nothing worse than being a customer and being stuck in a loop with the chatbot that's, supposed to be this like next gen AI assistant. I'm not going to name the bank in which I had this problem last week, but they said they launched, this new personalized AI assistant, and I was pulling my hair out going crazy because it was just this loop of not actually solving my problem, trying to get in touch with a human, but then always going back to the bot. So yeah, I think a lot to be worked on in this space.
Yeah, definitely. And this has nothing to do with the fact that obviously financial services are regulated and therefore there are restrictions, but it's the quality of the contact service that is not there yet.
And that's an interesting point. Last year, I gave a couple of talks about the tensions within embedded finance and bank as a service. And one of the tensions that I talk about is that the brands and the fintechs that consume and use embedded finance enablers and bank as a service providers, because embedded finance enablers, bank as a service providers are licensed and they just say, here's a product API you can get up and running within 2 weeks. A lot of the times the brands and the fintechs don't see what's underneath the hood. So, transaction monitoring, AML, KYC, they just see, this amazing API that lets them launch something super quickly. But at the end of the day, financial services are regulated, need to be regulated. And a lot of the time there does need to be friction in onboarding and, things like lending and investments and everything. So finding that balance between, you launching a embedded financial product quickly within your platform, but also recognizing that inherently financial products and services need to have some tension, and there is an extensive amount of regulation as well. This is one of the tensions between, consumers and producers of embedded finance and bank as a service.
Yeah, but I believe that because of cybersecurity risks that are, exploding everywhere, right?
Yeah.
And then I think that end users, end customers, everyday people are becoming more familiar and hopefully understanding that convenience is not the only desire here.
Yeah.
It's also to have a secure process, whether it's a service or you're buying something. And because of that experience of understanding that in our digital life, we do need some friction for that reason.
Yeah, absolutely. And I mean, I think this is also, a risk that brands run by embedding finance. There's one breach of their user bases, bank account details, or, customers get their account drained once and you're just going to lose, all faith and loyalty into that brand. I had an SME account with a fintech. Details were compromised from the BA hack, and one weekend my whole bank account was just drained. And there was no way to contact this fintech, right? Like, they didn't have customer support at the weekend. I was so stressed and concerned, and the experience was just so poor that at the end of the day, I closed the account and went through, the pain of opening up a new business bank account. But it just takes, one issue where, fraud details are compromised and that's it. Like, so that's also quite a risk that brands and consumers of embedded finance need to be aware of as well. Thankfully, there hasn't been anything, too significant with what we've seen. But yeah, as you mentioned, I mean, fraudsters are always one step ahead of everyone else, it seems. Yeah.
Yeah, no doubt about it. So embedded finance is here definitely, even with our Teams and Zoom calls. Apparently, there's payments. I've never used those types of functionalities, but you see that is the trend, and it will be interesting to see how this evolves with the improvement in customer service because of generative AI, and whether that will help both the non-financial businesses in mitigating these risks of bad customer experience, and on the other side, the BaaS providers to offer a better way. So before closing, Meaghan, tell me what you're excited about for this conference, the Embedded Everywhere in Portugal.
So I'm pretty excited because Portugal's a very small market. You know, it doesn't have the same vibrant fintech scene that you see in London or Berlin. And I think, you know, embedded finance, it's here, but it is also quite nascent. So I'm really excited that, you know, the whole Portuguese, you know, fintech scene is going to come together and talk about this. And as I mentioned, I was in Lisbon a couple of weeks ago, and I already met some of the fintech space here that are playing in kind of the embedded finance realm. So yeah, I'm just excited to see the opportunities. I'm excited to hopefully see some of the services I use in Portugal start to offer some financial products and services that just make the whole experience, you know, much easier for me as a consumer. So yeah, I think it will be a really fun event, and yeah, just excited again to see small fintech scene here focusing on embedded finance.
Great. Thank you so much, Meaghan.
Thank you so much. It was yeah, a fun discussion, and it'll be interesting to see where we're at in a couple of years talking about embedded finance.
Couple of years means next year.
Yeah, exactly.
Okay. Thank you, Meaghan, again.
Thank you.